Now, income from other sources, comprehensive problems. Let me see practice 1. Compute taxable income from other sources of Mr. Anbu. Dividend from Indian company 22,000 was fully taxable. Dividend from cooperative society also fully taxable. No any collection charges of dividend, so fully taxable. Next, interest on central government securities. It was also fully taxable. Next, interest on government national relief bar communal harmony fund. It was fully exempt under section 1015. Next, rent from subletting of house property along with plant and machinery. It is called composite lease. Here, repairs and maintenance of the plant, insurance premium of the house property. These two are the deductible from that income. So, let me see the answer. Dividend from Indian company fully taxable. Dividend from cooperative society also fully taxable. Interest on central government security also fully taxable. Interest on government relief bonds fully exempted under section 1015. Rent from composite lease of building with machinery. The total revenue is 96,000. Here we deducted repairs and insurance. So balance fully taxable. In the same pattern, the listeners can practice exercise 1 and check it up the answer. Let me see practice 2. Compute taxable income from other source of Mr. Arul. Dividend from foreign company, dividend from cooperative society, agriculture income in India, it was fully exempted. Agriculture income from Japan, it was fully taxable. Interest on deposit with the HDFC Bank, also fully taxable under the interest receipts. Director's fees fully taxable. Rent from let out of land at Ooty, it's a ground rent, it was also fully taxable. Interest on listed securities, it was given as a net. For the interest, when the income exceeds the 10,000, the 10% will be deducted as a TDS. So here we have to add the TDS with this net amount. Winnings from lottery also net. For the lottery, the TDS rate will be 30%. So the received amount equal to only 70%. We have to convert it into 100. Income from card games and the purchase of lottery tickets were given. Let me see the answer one by one. Dividend from foreign company fully taxable. Dividend from cooperative society also fully taxable. No any collection charges. Agriculture income in India was fully exempted under section 10(1). Agriculture income from Japan fully taxable. Interest on deposit from HDFC fully taxable. Director's fee fully taxable and ground rent at Ooty fully taxable. Interest on listed securities of XYZ Limited, it was the net amount, so we converted into gross into 100 by 90. Winnings from lottery are also the net amount. We added the tax 30%. So the gross amount will be 50,000 and winnings from card games 25. Here note purchase cost of lottery tickets rupees 5,000 be ignored. In the same pattern, the listeners can practice this exercise 2 and check it up the answer. Now let me go for practice 3. Mr. Akash, a member of parliament, MP, submitted the following informations. Salary as MP, it was fully taxable. Daily allowance as MP, it was fully exempted under section 1017. Dividend from domestic company, fully taxable. Winnings from horse race, gross amount was given 65,000. Maintenance cost of horses. With this income 65,000, we can adjust this maintenance cost to 35,000. So balance fully taxable. Next, royalty receipts from books written by him 1,20,000. They are actually stationery costs, stationery and typing cost of manuscript rupees 20. It is an expenditure, so we can adjust this expenditure with the royalty income of rupees 1 lakh. So royalty receipts from books 1,20,000 less deduction under section 57(6), the cost of manuscript only 20,000. The last one is collection charges of dividend. Here, allowances as MP are taxable under the new tax regime, and the collection charges of dividend from domestic company may be ignored. Only dividend collection charges from the foreign companies are allowed as deduction under section 57(1). Okay, in the same pattern, the listeners can practice exercise 3 and check it up the answer. Now let me go for practice 4. Mr. Vikram submits the following items for the previous year 21-22. Year 14,320 received as interest on securities from Andhra Pradesh government. Received means it is a net amount. 18,000 received, also the net amount. Here we have to grossing it up. And the 3,600 also received as interest on non-listed securities of a sugar company. These are all the received item, means in hand received. These are all the net items. So we have to add the TDS and show it as a taxable income. And 60,000 it is amount of investment in 12% securities of unlisted textile company. And 50,000 it is amount of investment in the 15% Tamil Nadu government loan. 60,000 is amount of investment in 13.5% listed dependents of Fox Limited. Interest on post office saving bank account 7,500. Interest on all securities is payable on 30th of June and 31st December every year. The bank charges 2.5% commission on the net collections of interest as collection charges. So computing the collection charges is an important criteria in this problem. Let me see the answer. Particulars, net and gross. Interest receipts. First one is Andhra Pradesh government. It is a government security, so no TDS. So net and gross the same amount. Second one, 18,000 received as interest on securities of listed company. 18,000 is the net amount, but the gross amount will be 20,000 because the 10% will be the TDS rate. And the 3,600 received as interest on non-listed securities. Also, it's a net, it's a gross. And the 12% securities of unlisted companies. So 60,000 is the amount of investment into 12%. We have to compute the net and the gross. And 50,000 into 15% Tamil Nadu government loan, also fully taxable. No TDS for the TN government. And 60,000 is the amount of investment into 13.5% listed dependents of Parks Limited. 60,000 into 13.5, 8,100. Next one, interest on post office saving bank account 7,500. Interest on post office, we can claim the exemption under section 1015 up to rupees 3,500. So balance 4,000 was a taxable. Here, now we have to compute the less deduction under section 57.2 bank collection charges. These are all the net amount. After TDS, the net amount credited in our bank. Only the amount credited in our bank account, the bank may charge us 2.5% as a collection charges. So we have to compute the collection charges only on this net amount. It is a gross amount computed for the income tax purposes. It is a net amount calculated to calculate the collection charges for tax purposes. Okay. So balance only taxable income from other sources. In the same pattern, the listeners can practice exercise 4 and check it up the answer. Let me see practice 5. Mr. Ashok submits information for the year 31st March 22. Income from camel races, it is a net, means in hand received amount, so we have to add that TDS at the rate of 30%. Income from gambling, it's a gross amount, it's a gross. So straight away we can tax this amount. Income from crossword puzzles, also 10,000, fully taxable. Income from lotteries of Sikkim state, it is a net amount. We have to add the tax, 30%. Income from card games, also fully taxable. So first these A, B, C, D, E, 5 items are casual incomes. Next, family pension received 48,000. Gift from relatives on the family function at a temple. Gift from relatives fully exempted. Cash gift received from friends on the wedding day. Any gift received on the wedding day also fully exempted, not taxable. He claimed the following deductions. Loss from card games, it will be ignored. Maintenance cost of camel, we can adjust this maintenance cost with the income from camel races. Here, the first one is 50,000. Purchase of lottery tickets will be ignored. Let me see the answer. First, casual income. Winnings from camel races 50,000. Actually, the net amount is 35,000 plus the TDS was 15. So, totally 50,000. Less maintenance cost 15,000. So, balance only taxable. Income from gambling, income from crossword puzzle, income from lotteries of Sikkim state, and income from other card games were fully taxable. So, total casual income was 1,92,000. Other incomes, family pension received a less deduction under section 57.4. 15,000 or 1/3 family pension, whichever is the least, was exempted, but not taxable. Note, gift from relatives on the family function at a temple is not taxable. Cash gift received from friends on the wedding day is not taxable. Purchase of lottery tickets and a loss from card games were ignored. In the same pattern, the listeners can practice exercise 5 and check it up the answer. Let me see practice 6. Compute taxable income from other source of Mrs. Madhavi. She gets a gift of commercial flat from the father-in-law by will. By will, any gift through will was not taxable, fully exempted, whatever may be the stamp duty value. She received a cash gift of rupees 75,000 and a birthday gift from her three friends. Three friends. The total cash gift exceeds 50,000, so it was fully taxable. Unexplained cash deposit in her bank account 80,000. It was also fully taxable. Family pension received 75,000. Income from vacant land, plot of land at Nilgiris rupees 25,000. It is called ground rent, fully taxable. Family pension received 75,000. Less deduction less than 57,4, one third or 15,000, whichever is the least. That amount is deductible from the actual amount, banally taxable. She received a scholarship from UGC for our fellowship. It was fully exempted under section 1016. Interest received regimental non-public fund rupees 10,000. It was fully exempted under section 10 subsection 23AA. It was given in the question itself. A laptop received from friend as a gift to 40,000. So, gift of laptop from friend is not taxable. Gift of commercial flat from the relative through will is also not taxable. So, the taxable income from other sources will be 2,40,000 of Mrs. Madhavi. In the same pattern, the listeners can practice exercise 6 and check it up the answer. Let we see practice 7. Calculate income from other source from the following particulars. 25,000 interest from post office saving bank account, full post office saving bank account. For PYSB, we can claim up to 3,500 exemption under section 1015, so barely taxable. Rupees 15,000 from 10% deposits of listed tea company, fully taxable. 4,000 interest on national development funds, fully taxable. 2,500 received as interest on fixed deposit, also fully taxable. 10% tax free deposits of Chennai Municipal Corporation, 45,000. In that 45,000, it is amount of original investment. We have to compute the 10% as an interest. Interest on tax-free government loan 18,000. It was fully exempt under section 1015. Interest on unrecognized provident fund also fully taxable. Interest on SPF, interest on statutory provident fund was fully exempted. In the same pattern, the listeners can practice exercise 7. In the same pattern, the listeners can watch 8 and 9 exercises and practices. Now, points to be remembered under for income from other sources. Tax-free government securities are exempted from tax under section 1015. Tax-free commercial securities should be always be grossed, no TDS, so no need to grossing up because they're tax-free commercial securities. Third one, less tax government securities should not be grossed because no TDS. But the less tax commercial securities should be grossed. Gift received from any relative on wedding day by will is not taxable. Cash or any kind of gift received from friends which exceeds 50,000 is to be taxed. Agricultural income in India is exempt under section 10.1. Agricultural income from abroad is fully taxable. Gift of foreign currency is fully taxable. No deductions are allowed for casual incomes but can deduct maintenance cost from race winnings. Interest on public provident fund and statutory provident fund was exempted from tax, but interest on unrecognized provident fund fully taxable. Awards must be approved by state or central government, otherwise fully taxable. Okay, bye.